Hi guys, it's Thomas here from COTBase.com. Welcome to a weekly COT review. Today we're going to be analyzing the 30-second Commitments of Traders report of this year. And as usual, we're going to start off by looking at the largest changes in commercials positions. When I said usual, I actually just thought about it. The past few reviews, I've been focusing on only one market. In today's review, I'm going to just scroll over briefly the classic COT report analysis part, but I will choose a market and we can go in more details using the intraday indicator, the iCOT intraday indicator. So let's start off. And before we go into the review, just a reminder for those who are new to COT analysis, here at COTBase.com, you'll find a lot of educational material. We have a lot of written format materials. We do have some very useful videos as well that will guide you through the analysis process. So here at COTBase.com, of course, we are focused at the Commitments of Traders report, but we have throughout the past couple of years managed to develop a software that's called the iCOT Intraday Indicator that is based on the concepts of COT analysis, but it goes into the micro level. You shall see that later on in this review. So let's start off with our first market that's on top of our list. You can see we've got lean hogs with a 19% change in commercials net positions. This, of course, based on a 52-week look back period. You can change that in the system, by the way, if you wanted to look at a different look back period. But this is lean hogs on a 52-week look back period, which of course corresponds to 1 year. And here's that latest change, which is larger than average. It is a bearish COT change signal suggesting some weakness coming in the next few days. If we move on to the 5-year chart, you can see that we had a significant bullish COT extreme, not the largest. We have seen much greater bullish extremes in the past, but it was a bullish COT extreme, and now we are moving away from those extreme levels. Now, of course, these jumps in the price that you see here could be obviously reason is that the contracts are changing. So that's the reason. Anybody trading lean hogs should know that. So we have moved away from those bullish extremes and headed towards more bearish extreme levels. So we have a bearish COT change signal combined with a more bearish extreme. Not there yet. You can see here back from June of 2021, a significant bearish COT extreme similar to the magnitude that we had in April of 2019. Okay, moving on to the next market, that's going to be British pound. Here we have a 16% change in commercials net positions. Jumping to the 1-year chart, you can see that change size on the chart being much greater than average. We have seen greater changes in the past. This one is actually a great example, just around that top, pushing the market a bit lower. Again, we are witnessing this short-term signal, the COT change. So changes in net positions, we call them COT change signals, and they could be effective in the near term. Obviously, I did not say, but I think it's you can see it, that we have commercials represented with the red color chart here. Large speculators are represented with green, and then non-reportables, who we call small speculators, are represented with the blue line over here. So in British pound, we have this bearish COT change signal suggesting some weakness in the next few days. Now, moving on to the 5-year chart, that gives us the opportunity to examine stress levels in the market, or at least in traders' positions. And you can see that not that long ago, a few months ago, we had a significant bullish COT extreme in the market. This coincided roughly with this bottom over here, but as you can see, the market did not follow through, and we have seen a continuation of this decline. Interestingly, we do not see traders corresponding with their positions to that. Now, this is not a bearish extreme, of course. We are still, if you compare this recent reading to the 5 years that we see in front of us, we're still a bit more closer to bullish extreme. So I wouldn't be surprised if the price of the British pound compared to the US dollar, of course, continues to decline. I would expect traders to shift their positions towards the bullish extremes in regard to COT analysis. The next market is the gasoline market. Here we have a 16% change, so the magnitude is the same, but in the opposite direction. It is a bit larger than average, but nothing too unusual. And I see that the market has actually risen this past week, so the signal could be a little bit late for us to act upon. But nevertheless, let's look at the extreme. And if you take this recent report and just look at the horizontal line, you can see that we are closer to the bullish extremes in the market, which of course suggests that in the medium to long run, we should actually be expecting higher prices in gasoline to come. Now, moving on to large speculator COT Extreme, another energy, crude oil. Here we have a 335 report extreme in large speculators net positions, 312 in commercials, so significant extremes in the two main trader categories. Small speculators, I wouldn't say anything too exciting over there. Again, this is obviously suggesting that we should expect higher prices coming in the medium to long-term future. Now, of course, this downwards trend that's been going on since June could continue. If it does, I would expect this trend in traders' net positions to continue as well, possibly reaching all-time extreme levels. We shall see. Now, I think is the point to switch over to our TradingView platform here and dig into our analysis with the iCOT Intraday Indicator. As you can see, we've got silver here. We haven't talked about silver, but in the past few reviews, you can see that we've been talking about how you could use the intraday indicator on silver. We have this 4 hours chart here, and you can see how well it signaled these bottoms in the market. And as you can see, we are headed higher. 1 second before we continue, for those who are new to this indicator here at cotbase.com, of course, we explain what this indicator is all about. I should emphasize that it is not data coming from CFTC. It is our own indicator, and we explain to you how it works. Basically, we are trying to measure stresses in the market, but in the micro time frame. So again, the concept is similar to traditional COT analysis. We have our own signals, and we believe that this can be actually very beneficial in your trading. So we are going to move over to crude oil. We're going to analyze the futures market and, of course, the continuous chart, because, of course, I want to show you how you can use our system. So we're analyzing crude oil. We understand that there's a bullish COT extreme in the market, and one might choose to start trading on the bullish side. And you may be interested in signals that are pointing upwards. So if that's the case, I'm not saying that's what you should do now. Everybody has their own system and ideas. This is really, this video is for educational purposes only. But here you can see crude oil with the intraday indicator in action. You can see we have on a 4 hours candlestick chart, we have one stripe and a few signals here from the system. Of course, these yellow diamonds are extremes in commercials represented with the red, and then when the candlestick changes color, that is when large speculators are at an extreme. You can actually set that extreme. So if you wanted to, you can go here into the settings tab and you can define what level the signal should be coming. So we have, of course, a default setting, but depending on the market you trade, I think it's a good idea to investigate what extreme levels you want to really consider as signals. So we start off with a 4 hour, let's say, and we can start moving into the shorter time frames. You can see what a wonderful signal here, actually a stripe signal on the 1 hour candlestick chart just at that bottom. And then, of course, we can move forward. Let's have a look at let's say 15-minute candlestick chart. There you go. If you're really trading in the shorter time frame, you can see you can actually go against your longer term view and temporarily get out of the market if you wanted to. So here's a successful stripe signal, a short stripe signal. And then of course we can go even deeper, let's say with a 5-minute candlestick chart. And you can see, here we go, you can see the stripe signal on the 5-minute, and we do have some signals from large speculators with changing colors, kind of indicating that we may have reached a bottom over here in crude oil. You can definitely go into even deeper shorter time frames here. This is a 1-minute candlestick chart. Here we are actually receiving some bullish signals. So this is kind of the way you use the intraday indicator, is going from different longer time frames. Because if you look at it the way I showed you, we started off with a 5 years perspective of crude oil, right? So it's obvious we have a bullish COT Extreme in the market. So there's no question about that. And then you can go into the micro level, a 4-hour, 1-hour candlestick, 15-minute, 5-minute, 1 minute, and if you choose, and you can see how this indicator works on these time frames. So I believe that this is a very thorough way of analyzing these markets. And I hope that you will give it a try. Again, at cotbase.com, we offer a lot of educational material. But if you have further questions, then please just comment underneath this video or send us an email to info@cotbase.com, and we shall try to answer your question. And hopefully you'll better understand these tools that are available at cotbase.com. Thank you very much for being with me. I appreciate your attention. I wish you guys a wonderful weekend, and I hope to see you in my next COT review. Take care. Goodbye.